Okay, we're going to get going because we don't have, there's a lot of slides here. I actually went a little overboard. This is the first time that I've wanted to do a full comprehensive update on OVDP or offshore voluntary disclosure issues. So I want to make sure that we give everyone enough time, including my colleague Fan Chen, who is here with us. She has some really cool tidbits on cryptocurrency at the very end. So this is me. For those that know me, I don't really like to talk about myself very much. So if you want to take a look at my background, you're happy to check out my LinkedIn profile. This is my colleague Fan. She's one of our managers here at the Wolf Group and a Rising Star. She basically does a little bit of everything, but one of her big areas of expertise is cryptocurrency. So we're going to have her speak to us today at the very end of the presentation on crypto. This is our disclaimer. I'm just going to leave this up here for a minute. Okay, without further ado, let's go ahead and get into the presentation here. So what I always like to start off with is a little bit of history. I'm a big history buff, and I think history is great for context, and it helps people kind of frame like what we're talking about. I had a great conversation yesterday with some financial advisors from London, and that they were trying to understand PFICs. And what I did is I said, hey, let me give you some history about PFICs and why PFICs exist. And that'll make the conversation go a lot faster. And sure enough, they were just like, hey, wow, we never had anyone ever start from that point and tell us about that, give context and background. So I think that's really important. Okay, so the first thing to note is the first thing that we're going to deal with here is called the Bank Secrecy Act. And that was introduced by Richard Nixon in 1970 and passed. That's Title 32 of the United States Code, whereas the Internal Revenue Code is Title 26. So it's two different sections of the United States Code that we're talking about here. So the Bank Secrecy Act comes in 1970. It's kind of a reaction to a lot of wealthy Americans in the 50s and 60s that were funneling money down to the Caribbean and creating offshore schemes and trying to convert ordinary income to capital gains tax. The BSA, as we'll see here in a minute, is updated significantly by the Patriot Act, which came in the 2000s. And we'll go through that here in a minute. The first real kind of comment about offshore, about folks using offshore locations to hide money or mask tax, comes in a radio address from President Reagan in 1983. And he kind of lays the groundwork, says, hey, I recognize there's an issue here. We're going to do something about it. You fast forward to President Bush, and that's the introduction of FATF, the Financial Action Task Force on Money Laundering, which is then handed off to the Clinton administration, where they put together the first strategy for anti-money laundering. That really takes hold and gives us kind of the direction that we're going in the late 90s into the early 2000s. You have the Patriot Act, which comes in 2001, which gives the FBAR. The FBAR didn't have a lot of compliance prior to 2001. In fact, I doubt most people filed the FBAR prior to 2001, believe it or not. But after 2001, the Patriot Act basically says, hey, we're going to give the FBAR some serious teeth. And here's the slide on that. And it basically says that there's going to be 5 objectives that the Patriot Act wants the IRS and FinCEN to work on together. And as you can see, the last one there is to delegate the penalty authority from FinCEN to the IRS. And the reason that's the case is because the IRS is really the only agency that can collect revenue in the government, whereas FinCEN cannot. So if you're wondering why the IRS sends the penalty notices and does all that stuff, it's because FinCEN really cannot do that. What I think is funny, though, is this third bullet point where it says evaluate enhancing outreach and educational guidance. I still do presentations to large groups of CPAs and attorneys these days, and it'll be a crowd of 100 people, and I'll say, tell me, raise your hand if you know about the FBAR, and literally it'll be like 10 people that will know about the FBAR. So it's still not, it's really crazy to me that it's still not a well-known disclosure form, but it's something that people really need to get their head around and be aware of. Okay. The IRS basically starts getting involved in offshore voluntary disclosure in 2003. I know that may be news to a lot of people. You may be thinking 2009 was the inception year, but actually 2003 is the first time that they did an offshore voluntary compliance initiative. And this is kind of illustrated right here. They had some folks that they knew that were doing promotions for hiding money or tax evasion in the Caribbean. There was this offshore credit card program that was being used as well. So they kind of did a test with OVCI and the OCCP, and it was pretty successful for them. I mean, they collecting 75 million in taxes, and getting a bunch of people to disclose, about 1,300 people to disclose, was a big deal back then. Okay. You fast forward, we have this character named Bradley Birkenfeld in 2007. There he is on the right-hand side smoking his cigar. He works for a Swiss bank, and he becomes a whistleblower that identifies all the things that the Swiss banking system is doing to hide accounts for US taxpayers, to hide income tax and things like that. And so he blows the whistle thinking, hey, if I blow the whistle, I'll get a big reward. It didn't work out too well for him in the end. I'm not really going to go into that. But what happens is that because of him blowing the whistle, we then get the first offshore voluntary disclosure program in 2009. It's a small run program. It's a limited run program. They had 15,000 disclosures, 3.4 billion, as you can see on the left-hand side, in tax, interest, and penalties. You fast forward then to 2010, you have the Foreign Account Tax Compliance Act that was passed by the Obama administration. And then in 2011, we had a second OVDI run. Again, short, kind of, 1 year period. Good success rates there, another 15,000 disclosures, another, about 1.5, 1.6 billion collected. The one thing that I'll note about the Foreign Account Tax Compliance Act is that the Form 8938 is introduced after that period, right? So really, when we're getting into the second offshore voluntary disclosure program in 2012, that's when we're really dealing with the Form 8938 for the first time. Prior to that, you were primarily dealing with the FBAR, maybe some PFICs, maybe some 5471s, but it wasn't as intricate as it is getting into the 2012, the second OBDP that's announced. You also had the streamlined procedures that were announced that same year. That's when they came into being in September. And so there's options on the table now, like which one do I go into? Do I do OBDP? Do I do streamline? Do I transition from OBDP into streamline? So you had a couple different ways that you could go with it. And then it got really dangerous. In 2014, the IRS said, look, if you're working with a bank, if you have an account with a bank that's been publicly identified, your penalty could jump from 27.5% to 50%. So be real careful if you're going to make a voluntary disclosure and do that. Think long and hard about it. There was a drop off in voluntary disclosures as we go towards 2017. There's only about 600 that enter the program. And so the IRS decides to close the program and announces kind of a new guideline procedure, which we'll go over later. But that's the history of kind of how everything came into being. This is, if you ever get a chance, it's really interesting. You can look at all the Swiss bank program non-prosecution agreements that were put into place. They're on the DOJ website. And here's just kind of a snip of that page and kind of the timeline in which they entered into. These are the list of the financial institutions that triggered the 50% penalty. Basically, it's just a list of all the Swiss banks or foreign banks. There are non-Swiss banks that are on here, but there's also names of what we call facilitators, or people that were selling schemes. They would come to the US, they would do presentations, say, hey, if you move your money to this bank, we can hide it for you, et cetera. And people would actually follow along with that. Also on the DOJ website, I always find this interesting. You can go look at the Offshore Compliance Initiative tab, and you can see kind of what the IRS has been up to lately, kind of, the frequency or the Department of Justice, excuse me, the frequency in which they're prosecuting people and the issues that are happening there. A couple other things to be aware of as far as the history that's occurring here is that we have the FAST Act in 2015 that introduces Internal Revenue Code 7345. And basically that says that if you owe the IRS $50,000 or more, and the following has occurred: a notice of federal tax lien has been filed, you've exhausted all your administrative appeal rights, and there's a final notice of intent to levy. Basically what happens is that your information is sent to the State Department, and the State Department can then deny, revoke, or limit your US passport. And so sometimes people will come to me and say, hey, I've got all these penalties from Form 3520, 5471, whatever it is. What am I looking at here? And I think the one thing that a lot of people forget to say is, hey, remember the FAST Act, because that could really prohibit your ability to travel. I know that everyone through the pandemic is itching to get back out there and do a lot more travel, especially international travel. And so if you do have debts and you are holding the US passport and the debts are in excess of 50,000, be very careful with that and make sure that you understand the FAST Act rules. The other thing which we'll bring up later when my colleague talks is the Taxpayer First Act. And this came into being in 2019, basically indicating that when the John Doe Summons is done, it's got to be narrowly tailored. It just can't be a blanket, give us everything about everything. You have to really identify the people that you're going after. And primarily the John Doe Summons is used, and this is where I think the overlap with crypto is, it's been used for foreign financial asset disclosure, but it's also being used for crypto. And so a lot of the principles for approaching or advising people about, disclosure are the same because it's a John Doe Summons. Okay, so some recent changes and updates for folks to be aware of. I'm sure everyone is familiar with the Panama Papers that came out in 2016. Gosh, that sounds like it just came out recently, but actually it was 5 years ago. I loved watching the movie The Laundromat. I don't know if anyone's seen that, but it's kind of, it takes the Panama Papers from a book that was written and basically puts it on the big screen so people can understand it a little bit better. But it's a huge link, about 11.5 million documents, 215,000 entities are being disclosed. There has been active efforts by various countries to recuperate money that has been hidden or tax that has been hidden based off of these leaked documents. And those efforts are ongoing today in several jurisdictions. What did happen this year is an even bigger leak, which is the Pandora Papers. And as you can see, it's more documents have been released. It really targets, billionaires, celebrities, world leaders. And on the right-hand side, you can kind of see a listing of the various folks. I just picked a couple names out of a hat here, but Shakira, Claudia Schiffer, Julio Iglesias, which hurts my heart very, very much. Prime Minister Tony Blair, et cetera. It'll be interesting to see, what comes out of the Pandora Papers, but what other future disclosures may occur. LB&I. LB&I is a division of the IRS. It handles the international cases. One of the things that happened this year was that they decided to retire the Obdp withdrawal campaign. So what that means is that there are a bunch of people that entered the Offshore Voluntary Disclosure Program. They decided not to complete it, not to pay the penalty. They disagreed with the IRS or whatever happened there, decided to take their own chances, and they withdrew. And the IRS wanted to understand what would happen next. How would they follow up on that? What would they do? But that campaign has now been put to bed, and the IRS is indicating that they are looking at other areas of tracking. One of the things that they've noticed is that a lot of folks that have done streamline filings have not kept up with the compliance. And when you do a streamline filing and you sign the form 14654 or 14653, you kind of make a promise to the IRS, or you don't kind of, you do make a promise. Hey, I will promise to file correctly and timely and accurately on a go-forward basis. And there's been a lot of people that haven't done that, that have, filed late or not filed at all. And so they're looking to see the non-compliance issues post submission of an amnesty program to identify and detect those folks and perhaps maybe undo some of the protections that these amnesty programs have offered. One thing to note is IRS FAQs. This is also a hot button issue. This has been an issue near and dear to my heart for many years. FAQs are not, guidance that you can rely upon historically. They're put out there on the IRS website. They're not published in the IRB, which is the Internal Revenue Bulletin. Only things that are published in the bulletin can be relied upon in a court proceeding. FAQs cannot be relied upon. And what happens is that the IRS will publish FAQs, then they'll update them, they'll take down the old ones, and then they're gone. And so if you take a position based off of an FAQ that's no longer on the IRS website and you don't have like a printed screen of it, it's hard to identify, well, did you really, rely on that position or not? And so sometimes what we'll do at the Wolf Group is we'll actually print out the screen, on the day that we're relying on that FAQ and say, hey, you got to hold on to this because it's not going to be historically referenced. It may be overwritten at some point in time. It may be moved. And I think the IRS kind of got the hint that that was not a good way to go because, again, if you eliminate text or things that the IRS has put out there, it's kind of like hiding the ball. So the IRS has basically said, look, we understand that this could be an issue. On October 15th, they did announce a revenue procedure where they're basically saying that if you relied on good faith on an FAQ and, you've got reasonable circumstances that, that can be the basis for a reasonable cause penalty abatement, which is great. That's great to say, but now we're looking for the IRS to walk that out. I'm not sure we've quite seen that yet, but in the near future, we hope to see some proof in the pudding. Oh, and then I highlighted in yellow over here that it looks like the IRS will maintain a database of anything that they've overwritten or old FAQs, which is also pretty awesome. Other updates, Subpart F, there was a memo that was put out by the IRS basically indicating that if you do have delinquency issues related to Subpart F, your statute of limitations will be extended not only for the Subpart F issue, but for the tax return as a whole, which means that if you do some kind of voluntary disclosure or some kind of submission where they can do an examination of your issues, you better make sure everything is up to date and squeaky clean, not just the Subpart F or 5471 issues. The Taxpayer Advocate, the new Taxpayer Advocate, Erin Collins, fantastic. She's going to bat. She's really doing a great job. Very proud of the work that she's doing. She basically got into a little tussle with the IRS recently, though, over international penalties. And what I mean by that are penalties on the forms 3520, 3528, 5471. The statistics show that the IRS, has gone gangbusters on these penalties lately. Part of it is because the pandemic shut them down for a while, and then when they restarted, they just started issuing all the penalties that they could. What's been happening, though, is that about 50 to 70% of all the penalties that they issue end up getting abated. So it's a really inefficient process. Also, it tends to be that these penalties are being issued by computers and not signed off by individual supervisors, which is a big time no-no. So the Taxpayer Advocate is basically saying that they're going to challenge the position on some of these, and they would love to see the first time abatement being extended to 6038 and 6038A. I personally think it should go beyond that to 6030 and 6038 and 6038A are limited. I would like to see 6038D, 6048. I mean, all the international forms should have a first time penalty abatement. That shouldn't be something that's limited to just the 5471. And what would happen there is if you did do kind of a first time penalty abatement, or you did do kind of more of a supervisor sign off, then it would give the opportunity for the taxpayer to explain reasonable cause or explain why something is amiss with that particular international form. So it kind of gives you the ability to speak to the IRS before a penalty is assessed, which would be really nice. Okay. The Build Back Better Act. This is the big moving act that's now with the Senate. And I think word came out today that they are thinking that they can try to get it done before Christmas, so December 24th. So that means yours truly may have to look at this bill on December 25th. That's my Christmas present or my cold present, depending on how you look at it. But they're really trying to get it done before the end of the calendar year. One big provision in there, which I think is awful, is that they would repeal 6751B, which is what I just said. That's the rule that says that a manager has to sign off on certain forms for penalties. So for example, if you get a 3520 penalty, a manager's got to look at it and say, yep, that's correct, and sign off on it. If that is repealed, then that computer can just go gangbusters and spit out penalties left, right, and center. And I think that that's what will happen. And if you think the penalties are bad now, you just wait to see what happens if this gets repealed. I think 2022 will be the year of the penalty if this does get repealed. So something we're watching very closely with the BBBA. There's been some bipartisan legislation. This always happens once a year. The last bill tried to end citizenship-based taxation. It really went nowhere, but there's a new one out there, HR 6057. They basically want anyone that lives abroad to file a 1040 EZ, which is laughable in my opinion, because I think that kind of leads people to a false sense of security if they have PFICs or foreign trusts or foreign corporations. But the point of the EZ is not for those things, but rather for the foreign tax credit and the foreign earned income exclusion. Instead of having to do the 1116 and the 2555, it would all be wrapped up on a 1040 EZ. Again, I'm not sure I'm a big fan. I get what they're trying to do, and I applaud them for making it easier for Americans abroad, but I think that it's going to lure people into a false sense of security that the filing process has gotten simpler when it hasn't. And definitely, I think a different take should be given on that. Okay, significant cases, and I'm going fast here because we have a lot of slides, and I want to make sure we do this within the right amount of time. So after the cases, I'm going to go a little bit faster, and then we're going to slow it down. But the first case I want to talk about is a recent case against billionaire Robert Brockman. He basically had about $1 billion of undeclared income in a Swiss bank called Mirabaud. What's significant about that is that Mirabaud decided not to participate in the Swiss bank program. So this is a huge black eye for that program and for that bank, because it's basically saying, hey, you knew this guy was holding $1 billion in undeclared income, and you decided you didn't want to participate in our voluntary program. Now we've got a big deal. So the Senate saying, well, hey, do we need to go back and revisit the Swiss bank program? There's been other people that have been doing whistleblowing on the Swiss bank program, that other banks have not been following the rules. It's the same thing with streamline filing. There's kind of a promise that you're not going to go back and be a bad actor again. And if they're still being bad actors, then I think that things may be a bit of an issue. So something to keep an eye on there. False streamline filings. There's two big cases that have occurred in 2021 on this. And I think some people think that when you do a streamline filing and it just kind of sails through, that's it and it's done. But I can tell you that there's no protection from audit or examination for streamline filing. And what I always tell people is make it clean. You can obviously anyone can do a streamline filing, but I'm always a little concerned when someone says I can do it for, super cheap, super quick. Basically super cheap, super quick to me means that not super quality. You want a quality, clean submission that accurately discloses everything. And if you don't have that, you could end up like one of these guys. And so, for example, Mark Anthony Gvetke, I forget, I don't know how to pronounce that name. But anyway, he's the CFO of a Russian natural gas company and was hiding $93 million in offshore accounts. He tried all sorts of techniques like, hey, put all the accounts in my wife's name, which tell you what, you can't do that for FBAR purposes. You're still the beneficial owner and you still have to disclose them. He filed false tax returns or late tax returns, late FBARs. He actually held a CPA license. So, I mean, that's even worse. You kind of know what you're doing at that point in time. He filed a false streamline filing. The IRS caught it, and then he was indicted just recently in September. One that's a little closer to home here in Northern Virginia and Alexandria, actually, we had this individual here that basically, Mr. Rahman out of Herndon, that basically, failed to disclose, I believe it was his Swiss bank accounts, out of all things. I think he had bank accounts in the United Kingdom and Singapore, Bangladesh, and he didn't disclose the Swiss ones. And if it's one jurisdiction the IRS knows and gets information from, it is Switzerland. But basically, they did a matching. They caught him. They said, hey, you didn't disclose everything, and prosecuted him for filing a false streamline filing. So you got to be real careful when you're coming back in using streamline filing. This is another case we have here. We have Mr. Brewer that had, millions of dollars accounts in Croatia, Germany, Serbia, Switzerland, basically sentenced to 24 months in prison. My favorite here, though, is that he had a yacht that was worth about $1.3 million. And also he had a home on Lake Fort Worth in Florida worth about $1.6 million. So basically taking all those income, shielding it, and then buying big assets. You might as well put a big bullseye on your back for the DOJ and tell them to come arrest you at that point in time. Okay. Life insurance wrappers. I've been hearing about this for years now. I remember being in Switzerland in 2012, 2013. And that was the big thing. They're going to start going after life insurance wrappers. They hate life insurance wrappers. They're used heavily in Liechtenstein, Switzerland, places like that. And then nothing. We really didn't hear much about it. Well, lo and behold, here we go. May 14th, 2021. The DOJ has now gone after several life insurance companies in Switzerland. They've collected more than $77 million and 1,600 insurance wrapper policies. The problem with a wrapper is that you can only see the top layer of the wrapper. You can't see what's underneath it or what's being done underneath it. And a lot of times you have PFICs that float in there. And so, in those cases, you have a lot of non-disclosure that could be occurring if you're a US taxpayer. So I think the life insurance wrapper is going to be an area that, they talked about it a lot in the past, but I think this could be something that in the future, if you're dealing with this, you might want to be real careful about it. This is an interesting one. So this is Oleg Tinkov. This is a Russian oligarch that basically was worth a lot of money. He founded a bank in Russia. He did an IPO, and then literally 3 days after the IPO, he goes in and he expatriates from the United States. He held U.S. citizenship since 1996. He gets the bright idea on his expatriation form to say that his net worth is $300,000, even though his asset base is about $1 billion. And basically, again, just asking to be audited. When you do the 8854 and you're submitting that along with the certifications, that's the real last bite at the apple that the IRS has to audit you or check into these things. And so this isn't even close to the reality of his net worth. He was basically audited and put through examination, and he entered into a significant plea deal. There's the Singapore solution, which is another thing that we used to hear a lot about when, when the Swiss campaign was going on, that all the money was moving from, Switzerland to, say, Israel, India, Singapore, and that, the Department of Justice and the IRS would be looking at those jurisdictions next. Well, the Singapore solution is something that it's kind of a roundabout solution where you go in and you open up, accounts with banks in Switzerland. They then move the money over to Singapore, and then an asset manager in Singapore then reopens up an account in Switzerland that the individual has access to. And so basically, they've caught several wealthy U.S. folks that have been trying to do this solution and prosecuted them or indicted them as of September 28th. The attorney-client privilege case. So this is an interesting one. What happened here is that this law firm basically had an individual that was caught not reporting about $5 million of income. And when he came forward and told the IRS this, they decided to do a Doe Summons for all of the clients of the law firm. And basically the summons went through, believe it or not. And it's kind of like a violation of attorney-client privilege, because if anyone were to come to this law firm and say, hey, I've got this issue and I'd like to get attorney-client privilege and I want to be protected, this is basically saying we can take that away now. We want you to tell us about anyone that may come into a law firm and ask for advice related to undeclared foreign financial assets. I wonder if this would even extend to cryptocurrency. So I think there will be further litigation on this. It was denied by the Supreme Court, but perhaps in other situations, this could rear its ugly head. But this is a very specific fact pattern, and I think that's probably why it was denied by the Supreme Court. But something to be aware of when you're seeking advice on these types of issues. The Eighth Amendment, I love this argument. I thought the Zwerner case a couple of years back would get us to an Eighth Amendment argument before the Supreme Court. But here we are, United States versus Toth. Basically what's happening is that Toth is being assessed $3.1 million in civil penalties for FBAR problems. That is 70 times more than the maximum for criminal liability. And he's basically indicating, hey, that's excessive fines under the Eighth Amendment. So we're looking to see if that's something that may be decided, in the favor of the taxpayer. We don't know yet. That's still pending. Okay, Schwartzbaum. Schwartzbaum is a repatriation case. So a lot of times people will ask me, well, if I leave the U.S., how will they find me? How will they get to me? What will they do to me? Schwartzbaum is an example of what happens, with the worst case scenario. So he's out in Switzerland. He's got, about $18 million in Switzerland in Swiss bank accounts. He willfully failed to file FBARs for 2007 through 2009. We fast forward to 2020, and there's a judgment entered in against him for about $15 million plus, post-judgment interest and penalties. And the government filed a repatriation order against him saying, hey, you now owe us $18 million and we're here to collect from your Swiss bank accounts. And so he's arguing that the bank accounts are outside the jurisdiction of the United States. So it will be interesting to see, where this case goes and if the US government can actually win this case and obtain that money. Another interesting one is the Schedule B. I talked to a lot of people about Schedule B. Did you fill out Schedule B correctly? Did you know about Schedule B? The Hughes case is super interesting because it says that, she filed tax returns for 2010 through 2013. The first 2 years did not contain a Schedule B. And so the judge basically said, since there's no Schedule B, there's no way you could have been on notice about the FBAR. So for those years, you're non-willful. However, for 2012 and 2013, there is a Schedule B and you were on notice for those. So we're going to say that you're willful for those 2 years. What's funny is if you look at the IRM and what the IRS says, the IRM is the Internal Revenue Manual about willfulness in Schedule B. I'm not sure it was ever really intended that Schedule B would put someone on notice for willfulness or non-willfulness or for an FBAR filing, right? But the language has changed over the years where it seems a lot harsher than it used to be. And the IRS's basic take is it doesn't matter whether or not you had a Schedule B in your tax return. The instructions to Schedule B are online. You can find them. As a taxpayer, it's your duty to investigate and do your due diligence. As long as those instructions exist, and you don't file your FBAR, you're basically willful, which is a huge leap in my opinion. I think I like the fact that the judge is distinguishing here the difference between a Schedule B being on a tax return versus being off of it. But again, I think if you are going to use Schedule B to determine liability like this, then it needs to be overt and clear. And I've made those comments many times with both that and cryptocurrency. So there's Schedule B, Part 3, if you ever want to take a look at it. There's the crypto question, which is on page 1. There's the 2021 draft return, which I think, again, these things are kind of hidden. It's hidden at the bottom of Schedule B, hidden in the middle of page 1 of the tax return. I think they need to be overt and out there. Okay, another big thing, penalties by form or by account. I've gotten lucky a couple times when I've done FBAR audits where the FBAR auditor said, look, we're going to go with the $10,000 penalty for the form. I could go by account, so it would be $50,000, $60,000, $70,000, but I'm not going to take the win. And we basically settled for that. But this is a huge issue. You know, the 11th Circuit is basically coming in and they're looking at, in the United States versus Solomon, should it be by account or by form? Recently, there was a settlement in Boyd in the 9th Circuit where they basically said it's by form, it's not by account. And that's pretty significant because if you look at Solomon, you know, she had 20 separate $10,000 penalty assessments for her accounts. And that's $200,000. But if you go by the number of FBARs that she's delinquent on, then it's only $70,000. So it's a big swing between the number of accounts and the number of forms that have been failed to file. Just settled yesterday was the Bittner case, or actually a couple days ago on November 30th. And the 5th Circuit basically said that the non-willful penalties apply per account. So I think when it's all said and done, when you go back and you look at Bittner, the outcome here, the outcome in Boyd, and the outcome in Solomon, this is ripe for the Supreme Court to get involved. And I hope they will. I hope they'll take these issues up and really settle. Will this $10,000 penalty apply by the form that you failed to file or by the number of accounts per form that you failed to file? Because that's a big, big issue that I think a lot of people need to be aware about. Lastly, there's the estate of Wilson, which is on trust penalties, foreign trusts. And basically what's happening here is that the IRS said, look, we're going to assess for failure to file the 3520 a 35% penalty on the owner, who we also say is the beneficiary, for a distribution of $9.2 million. But if you read the instructions, the penalty should be on 5% of the value of the trust at the end of the year, which is 0. So that's a big swing, right? 35% of 9.2 million versus 0. So it'll be real interesting to see here if the Supreme Court takes up this penalty case. I will tell you personally, I hate the 3520 and 3528 penalties. In my opinion, they are borderline ridiculous. And they're even more excessive than the FBAR penalties in many cases. I mean, you can see people racking up millions of dollars of penalties here on just one form. So this is something that I think that everyone should go back and look at and say, you know, is this really having the intended, you know, effect that we want it to have? Especially because these forms have to be paper filed. You have to do it in the right incantation of, you know, grantor trust owner statement, all this other stuff. It's a real nightmare to be compliant with forms 3520 and 3520A. And I'm not sure the penalties match the goal that the IRS is trying to reach. Okay, I'm going to go a little fast here because we need to get to some of the other juicy stuff here, but I wanted just to give everyone a snippet of some of the international forms that are floating around out there so that everyone can be aware of the ones that apply. Generally speaking, Form 3520 is going to apply to a foreign trust. There are only 2 flavors of foreign trusts. There's grantor or there's non-grantor, and the 3520 applies to both. There's also tie-ins to the Form 8938. If you look at the top right-hand corner of the Form 3520, there's a box that you have to check that says it's a specified foreign financial asset. When you do that, on the Form 8938 Part 4, page 1, it'll then register a little number next to the Form 3520 so that you don't have to do duplicative reporting of a foreign trust on Form 8938. The Form 3520, and there's the tie-in, just so that everybody can see it. The Form 3520A, again, here's a listing of all the penalties that I just talked about, the 5%, the 35%. The last thing to know about the 3520 is that Part 4 is used for large gifts or inheritances. And so basically, if you're getting in excess of $100,000 from a non-US person as a gift or a bequest, you definitely want to report that into Part 4. The 2021 3520 actually is a little bit updated on this, and it basically says that if any of the gifts are below $5,000, then you don't need to report those in that section. You still need to report anything that goes above $5,000, but if it's below $5,000, you can leave those gifts off and just say, you know, there's a certain little input that you put in there for that. So that's interesting. Okay, 3520A. The 3520A is only used for grantor trusts. It's not used for non-grantor trusts. This is similar, in my opinion, to like the K1 from a 1041. And basically what it's doing is it's producing a foreign grantor trust owner statement or beneficiary statement. And then that technically should flow into Schedule E Part 2. I would note that you will need to get an SS or an EIN, do the SS4, make sure that you get a separate taxpayer identification number, because if you don't, then your client, if your client is assessed a penalty, it goes under their individual taxpayer number, and it's a nightmare to try to link everything up. Okay, these are the penalties for the Form 3520A. There's actually an active IRS international campaign for non-compliance. So if you've been filing it and then you stop filing it or you stop doing it correctly, the IRS is looking for people that are going that route. There's also the obscure filing for foreign pensions treated as foreign grantor trusts, which I know a lot of practitioners are talking about lately. The analysis is we at first thought it was very easy and straightforward for some of the solutions. Now we're learning it's a lot more complicated than it ever has been before. But basically what happens is that if you have a self-directed pension similar to an IRA, where you're putting all the money into it and it's a foreign pension, then it's likely going to be a foreign grantor trust, or that's going to be the default setting. Additionally, if you're making more contributions to a defined contribution plan, a foreign defined contribution plan than your employer, then that could also become a foreign grantor trust. And so you have to be very careful with that. The saving grace was Rev Proc 2020-17, which was issued right at the beginning of the pandemic. And like I said, we thought that this would give people a big pass, but we've learned recently that these $50,000 and $100,000 contribution limits are not what the person puts into the plan, but rather what does the plan say the person can put into it, which again, each jurisdiction has a different rule on the limits, and some have no limit, which if there's no limit, then you can put whatever you want into it, then you obviously would not qualify for the Rev Proc. So it basically, what this boils down to is that if you're trying to get relief under the Rev Proc, you really need to look at it on a country by country situation and determine the contribution limits. That's the big thing. The other big thing is that it has to be from earned income only. So for example, if you sold real property and you had a capital gain and you put that into your retirement plan, that's obviously going to disqualify it for Rev Proc 2020-17. And then lastly, you have to be in full compliance with prior filings. I'm not really sure that we've ferreted that out. Does that mean that up to, through the 2019 tax year, you filed a foreign grantor trust and then you just stop because you now have relief in 2020 moving forward? That's a question I think that needs to be addressed by the IRS. You can see here that they basically say you don't need to file if you do qualify. There's an exemption from filing. And then this is for international savings plans, which a common example of that would be an ISA in the UK or an ISP in Jersey. And then if you did get a penalty, say maybe on a Canadian RRSP or something that does qualify for Rev Proc 2020-17 and you want your money back, you can do the Form 843, you can present your proof, you have to fill it out a certain way. And if it's going to create a significant hardship, you can immediately send that to the Taxpayer Advocate and they will help you out. Okay, exit tax. Exit tax, just to know that there is a program for citizens, not green card holders. So as long as you don't have a filing history with the IRS, and this is basically for accidental Americans, and your aggregate total liability over a 5-year period is $25,000 or less, you can use this program. You can file your 5 years of tax returns. You can file the 8854. You don't need to have a social security number. You just file, pay the tax due, file your national reports, and you're good to go. This is some tips about things that you need to understand for doing the loss of nationality, and things that are available to a lot of people. Some folks, for example, have filed all of their tax returns but not filed the 8854. So if you've done all of your tax returns but not the 8854, you can use this FAQ 24 relief. So you really need to read through the tips or the IRS language on this relief to determine what's available to you. Okay, other types of international reports that may come into play for offshore voluntary disclosure. Obviously, there's the FBAR, and I think a lot of people are always confused about this aggregation, this $10,000 aggregation. But to be clear, it's you take all of the accounts, you find the maximum value at any point in time during the year, and if that aggregates to over $10,000 when you add all that up, or over, then you have an FBAR filing requirement. And so that's something that I think everyone has to understand and look at very closely. The FBAR could have a wide variety of things that could be reported on it. Bank accounts, checking accounts, securities accounts, annuity accounts, self-directed pensions. So be very careful about what you do and do not put on the FBAR. The FBAR penalties are indexed for inflation, and I think now the penalty, the non-willful penalty, is up to $12,000. And I'm sure that that index for inflation for 2022 will push that somewhere into the neighborhood of 13,000 on a go-forward basis. The Foreign Account Tax Compliance Act, as I stated earlier, gave us Form 8938. The 8938 is based off of different thresholds, and a lot of people think, oh, it's the same as the FBAR, and those are the thresholds. But it's really not. There are a lot of other things that can be included on the Form 8938. You could be including, offshore interests in foreign entities, foreign trusts, foreign stock, financial instruments, offshore crypto could be reported on there. That's what the form looks like. The penalties are also which really haven't been enforced, kind of, significant here. So it's a $10,000 penalty for failure to file, but then if the IRS notifies you that that's an issue, it's a continuing penalty until you get to 50,000. And a lot of people don't really get the idea of the continuing penalty. It's really shocking when someone gets a $10,000 penalty and then it becomes 20 and they're like, well, how'd they get to 20? It's because of a continuing penalty. So be aware that the continuing penalty is linked to a lot of these international forms. You also can have accuracy related penalties, fraud penalties, and a slew of other penalties. Different other international forms that may come into play. So for foreign corporations, it's the big four, in my opinion. You could have the 5471, which is the general foreign corporate form. I'll talk more about that here in a minute. The 926 is basically when you're making contributions to a foreign corporation. The 965 is for transition tax, and the 8992 is for the GILTI tax. For foreign partnerships, and again, there has to be an analysis. Is it a partnership? Is it a corporation from a US perspective? If it is a partnership, then you may need to file the 8865. If it's a disregarded entity, again, another analysis, then it's the 8858. The Form 5471, in my opinion, is the most complex form to complete with the IRS. Prior to 2017, it really was super easy. It was just, you slap on a profit and loss, you slap on a balance sheet, you scope for subpart F issues, maybe a 956 inclusion, maybe your submission is 8-10 pages long, nothing too crazy. Nowadays, if you look at the category 4 filings, look at all the different schedules that you have to put in there. These things are ballooning up to be 30, 35 pages. And there's all these terms, that you have to learn and understand, and, how does it flow on the Schedule J, Q, M, R. I mean, it's just a lot of different things. And all these categories, look at this, 1A, 1B, 1C, 5A, 5B, 5C. It's a lot to digest and to understand. And so my comment to a lot of people that do have the 5471 filing is really, you got to have patience here, because this thing just keeps on changing. It gets more and more complex. And unfortunately, the BBBA, the Build Back Better Act, is going to change it again. And I think that the form will also change to correspond to those changes. So no rest for the weary when it comes to the 5471. This is just a snip of what the GILTI form looks like. I love the acronym GILTI. I remember when it first came out and they first put the acronym out there, it was kind of like, hey, this is what we think about people using offshore corporations. PFIX, which I despise PFIX. It's a very punitive tax regime, but basically PFIX are very, very time consuming. They're very, you have to complete each holding separately on a separate 8621. They're taxed quite punitively. They're typically, you're going to find these with pooled investments, mutual funds, insurance wrappers, which I stated earlier. Why are they bad? They're bad because, the tax is just enormous, or can be enormous, to the point where it's confiscatory. So a lot of people think, oh, I've got this foreign stock holding, I should be getting, the normal qualified dividends, long-term capital gains, et cetera. But what you instead get is a significantly higher tax rate. Okay. There are different options to report PFIX, and you do need to make sure that you just don't say, hey, we're going to do mark to market, or hey, we're going to settle for 1291. You should really talk with your advisor to go over all the various PFIC options. This is a table that I put in for the various penalties that could be applied by form, in addition to the continuing penalties, other types of penalties, and statute of limitations. I think this is super handy when kind of doing a penalty analysis or risk analysis of, hey, do I file it this way, or do I file it through Streamline Filing? That way you can understand kind of what you may be on the hook for. Non-residents and LLCs, this is a big one for us because we do work with a lot of G4s and a lot of diplomats under the A1. No one really kind of tells them that they shouldn't really open an LLC as a disregarded entity. But if they do, then you're going to have to file this page 1 of 1120 and the form 5472 to report any transactions between yourself as the non-resident and the US LLC. And that filing requirement came into being starting with 2017 and goes through to this day. You still have to file those forms if you have that requirement. And as you can see, the penalties are quite enormous. They've increased to now 25,000. This is the general procedure for completing the form. Believe it or not, you can actually fax it into the IRS. Again, I'm not a big fan of anything where you have to fax or mail. So hopefully they'll change this in the future where this can be e-filed. When it comes to folks that have a delinquent filing in this area, there's not a good approach, in my opinion. It's kind of one of those things where you send it in and you hope you don't get penalties. But there are some things that you have to cross-check for. They won't allow reasonable cause to go through. If, for example, you have an 1120F filing and it's not been done, then you do need to do the 1120F along with the 5472 1120. So, make sure that you get a comprehensive scope on the issues that are required for that and before you submit everything. The Corporate Transparency Act, which is the defense bill that came in, it was one of the last things in the Trump administration. And it's actually, I think there's another defense bill that they're working on right now. But this one added the Corporate Transparency Act. And as I've stated before, I've read through defense. This is the first defense bill I've ever read through in my life. And it's all gobbledygook to me. I couldn't understand heads or tails of it. And I consider myself to, I think, be an educated person. But, good luck to our military leaders. They must be much smarter than I am because a lot of that stuff didn't make sense to me. But this does. The Corporate Transparency Act basically says that the United States government recognizes that there are a lot of businesses being formed in the US by non-US people. There's a lot of money flowing into the US from foreign countries in an effort to evade tax in that foreign country. And yes, the US is the biggest tax haven in the world. And so in order to kind of help combat that, a new FinCEN form will come into being. We think sometime in early 2022. And basically, if you're a foreign person and you have ownership in a foreign company that is beyond 25%, and again, these are the different rules that define what it is, then you basically need to identify yourself, complete all this information. I think you have 90 days to do it from when the form is released. And if you don't do it, it's a $10,000 penalty. That's what FinCEN and the IRS love, $10,000 penalties. So keep an eye out for that if you have that filing requirement. It's a little obscure, kind of like the BE10 back in 2020. They have not put that out yet, but they will do so very soon. Okay, voluntary disclosure programs, the real nuts and bolts of what we're trying to talk about today. So there is still an offshore voluntary disclosure procedure that can be used. It's that 2018 new guidance that I mentioned earlier in the presentation. I have only done one of these since 2018, and I'll tell you right now, it's a lot of work. It's a lot of work to try to get this through. And I think it's only necessary if you have someone that has a criminal type of behavior or action. More so, this context is being used, I think, for employment cases, because there's a voluntary disclosure program for people that have been misclassified in the employment setting. But for foreign financial asset disclosure, you can still use it for tax returns and FBARs. And the limit is now 6 years, but there is a 75% fraud penalty that you will have to pay. Streamline filing domestic, which is something we do a lot of here at the Wolf Group. Basically, a couple tidbits on this. You can't submit a delinquent return. So if you haven't filed, you can't use the program. It has to be an amended return. So that's a real critical component of being able to do a streamlined domestic program. And basically, you have to do domestic if you can't show the IRS that you've been outside of the US for 330 days or more in one of the last 3 years. There's also a couple of rules there about your abode. So basically what I'm trying to point out here is when you're making a determination whether you should do streamline domestic or streamline foreign, make sure you look at the residency certification rules in the streamline foreign procedures before you make that determination that you can actually use streamline foreign versus streamline domestic, okay? Streamline domestic basically wants at least the last, the period of time that they want the disclosure for the FBARs, 6 years. If you only have 5 years of delinquency, then you do the 5 years or the 4 years or whatever it is. But 6 years is generally what they're looking for. You will do the form 14654. You'll do your 5% penalty calc. you'll do a non-willful statement, which I'm a huge advocate of letting attorneys do that. I don't believe CPAs should do that. I don't think they should be self-written. I think an attorney should always, as a separate function, write a non-willful statement. I'm also a big advocate of having the Form 2848 to track a streamlined filing, because you do want to monitor on several different points throughout the process. And I'll get into that here in a second. There's a recent change in August of 2021 to the streamlined procedures. It basically says that if you have a transition tax issue, there's no constructive PTEP, which means that you can't just file 18, 19, and 20 and go ahead and get previously taxed earnings and profits for a foreign corporation that had to pay the transition tax. You actually now have to go back to 2017 and do 17, 18, 19, and 20. And yes, you can do more than 3 years through streamlined filing. I know a lot of people say you can't, but you definitely can. In this case, they want you to actually do 4 years. And that could expand out. Think about this. We get to 23 or 24 and someone hasn't done this, you could be doing 5 or 6 years of filings through a streamlined filing. And there are special things you have to write on there, section 965 in red. So make sure that you work through this, because if you submit something that looks like it has a transition tax issue, but it's not done properly, your streamlined filing could get audited. Okay. This is the link to the streamlined domestic FAQs. Last time I saw, they had 17 FAQs. There is also a video that they have to help out. So make sure you always check the FAQs. Eventually, according to the FAQ guidance I mentioned earlier, there should be a library of all the FAQs where you can check the past, present, and future. So that'll be helpful. This is a snip of FAQ 13, which basically tells you what you need to include in your non-willful statement. I always see these non-willful statements that are self-prepared that are like 3 sentences. And obviously that's not going to fly with the streamlined unit. I mean, look at this. They want you to give the whole story, favorable and unfavorable facts, personal background, financial background, source of funds, who you worked with previously, why you opened up the account. I mean, that's a lengthy explanation. And that's why I always suggest an attorney, and not just any attorney. I mean, I would say an attorney that's very familiar with this FAQ and has done this and been successful with this before. You know, I'm a big believer on that. I'm also a big believer that the non-willful statement, in my opinion, is the most important part of a streamlined filing. Sure, you want to get the tax return squeaky clean. You want to make sure you include all the FBAR items. You want to do the 5% penalty correct. But the non-willful statement, is where you will live and die when it comes to the IRS saying, yes, this is a quality submission, or no, it's not. So take great care with your non-willful statement. The other thing is calculating the 5% penalty. I see people get this wrong all the time. This is just kind of a little step-by-step guide on how to do the 5% penalty. One of the big things is step 2 here is you need to use the year-end value. The IRS does this for a reason. They don't want to assess the 5% on transfers within accounts. So I see some people just take the maximum value from the FBARs, they slap it on the 5% penalty, and they calculate it. That is completely wrong. You have to look at there's a reason why we ask for the year-end value, at least here at the Wolf Group, and the maximum values, because you take the year-end numbers, you put that in, and then you calculate your 5% penalty from that. That's the difference on the 5% penalty versus the FBAR. And so when some people get the form 14654 and the penalty calculation, and they look at the numbers like, oh, this doesn't make sense. My FBAR said I had this, but you're saying I had that. It's because we're using the year-end number, not the maximum number, and we're trying to get you to the lowest possible penalty. There are ways to also reduce the penalty for what we call compliant assets. So if you maybe previously filed an FBAR and reported 4 assets, but maybe there's a 5th one that never got in there, and you're doing a streamlined filing to report that 5th one, then you need to reduce the value of the 4 that are compliant to 0. And there's a procedure and process for doing that. The last thing that's a myth, in my opinion, people think that the 5% is assessed on every single year that goes into a streamlined filing. That's wrong. It's only on the highest year out of the 6 years within the streamlined filing that the 5% is assessed upon. So make sure you keep that in mind. In my opinion, it's a great deal, especially thinking that the IRS can now levy by account the $10,000 penalty. I would take the 5% all day. 7216 disclosures. A lot of people are always confused about what this means. It just gives the CPA firm that you're working with or tax preparer the ability to speak to other parties, like an attorney that may be doing the non-willful statement, or maybe you have a family member that's helping you out. Make sure you always do this as a first step, because there can be no retroactive consent. The communications or things that are exchanged before you get into this, That's not covered under 7216. It's only anything that happens after the 7216 is signed by the taxpayer. Now, in some cases, I will introduce a client to an attorney or a set of attorneys, say, hey, this person needs potentially this service. That I think is totally fine because it's a very general thing. But when you talk about specifics related to preparing tax returns, that's where you need to have a 7216 disclosure in place. The Form 2848, in my opinion, this is super powerful for a streamlined filing. One of the rules with streamlined filing is that you can't be under audit or examination when you submit it. So what I always do is check the client record. So I call into the IRS, call Practitioner Priority Service, tell me, are there any audit or examination codes on 2018, 19, and 20? Give me account transcripts. If there's balances due, I need to know the ACED, the RSED, and the CSED dates. That's the assessment date, the refund date, the collection date. I try to get all the background information I can in that one sitting because only 7% of all calls get through to the IRS. So you want to try to juice them up as much as you can if you get through. I also use then the 2848 right before submission. You call in just to make sure this person is still not under audit or examination. Okay, green light, file everything. And then after the fact, when the streamlined filing is submitted, you can then monitor the correspondence that comes out, which should be 3 CP21 forms, one for each tax return that's filed, and a CP15 if you paid a penalty, codifying that the penalty has been accepted, payment's been made, and everything has been zeroed out. That's kind of how you know that the streamlined filing process is done on the IRS side. So critically important to make sure that you're monitoring that on behalf of your client. Streamline foreign, a little bit different than streamlined domestic. There's no 5% penalty, and you can do delinquent returns. They don't have to be amended. So a great option to use if you have the ability to use it. These are the streamlined FAQs. And these are my general do's and don'ts about streamlined filing, because these are some questions that I normally get from people like, can I do a treaty tiebreaker through streamlined filing? The answer is no, you cannot you can't do a treaty tiebreaker, or should you do a treaty tiebreaker? So these are some things that I think maybe some tips to take home. Other programs that are out there, the DIR SP, which I'm not a big fan of because we've learned that there's real no protection. This is basically a quiet disclosure with a reasonable cause statement. Then there's also the DF bar. I think this one is still a pretty viable program if you have no unreported income, but something to consider again. But again, this is a program the IRS has mentioned many times. It's only to be used if you don't have any unreported income. So be very, very careful when you're doing the DF bar. Okay, now I'm going to turn it over to my colleague, Fan. She's going to go over the cryptocurrency stuff.
Thank you, Mish. That was a lot of very good information. A lot of history goes with offshore voluntary disclosure programs for foreign financial asset. But cryptocurrency is, relatively speaking, new to the world, especially new to the IRS. The Treasury proposed some changes to cryptocurrency reporting. Most of these are already made into the infrastructure bill. They updated the IRC 6045, which says the cryptocurrency or digital asset brokers are to be treated as a traditional broker. They are subject to the Form 1099B reporting and cost basis reporting. They also passed the update to IRC 6050I. Digital assets like cryptocurrency needs to be treated as cash. Businesses need to report if they receive more than $10,000 in one transaction. One thing that's kind of like hidden proposal for the cryptocurrency is the IRC 6030AD, which relates to the foreign financial asset reporting. Next slides, please. As you see here, the Treasury would like to see all the cryptocurrency you have, domestically or offshore. And if this proposal gets passed, it will drastically change the reporting for cryptocurrency. It could be very tricky or almost gameable to determine what's reportable virtual currency, what's foreign, and what's not. Next slides, please. The IRS LB&I, which Michigan mentioned a little bit earlier, the large business and international division, they came out with this active campaign for virtual currency as well. It's in place to address the non-compliance issue related to virtual currencies. As we underscored here, the very last sentence, the IRS is not contemplating a voluntary disclosure program specifically to address tax non-compliance involving virtual currency. This campaign came out before the pandemic due to, the anonymous nature of virtual currency. The IRS probably thought not that many people would like to come forward or disclose their virtual currency. Probably a very similar reason why they closed Obdp program. They see less people using it. But as we've seen the past year or two with the pandemic, crypto became a lot more mainstream, and a lot of people are now involved in cryptocurrencies. A lot of financial instruments are out there on the market, easily accessible, available to people, like cryptocurrency credit card, loans, DeFi, financial instruments, NFTs, you name it. And in practice, we see this a lot. People come to us, they're willing to disclose and they're willing to clean up their cryptocurrency income, transactions, and reporting requirement. Without a disclosure program or streamlined program like we currently have for the foreign financial assets, there's no clear guidance, clear guideline for people to follow, to come into compliance, or even know what to report and when to report their cryptocurrency transactions. Next slides, please. Thank you. As we are hopefully familiar with it now, the IRS sent warning letters, more than 10,000 of them, back in 2019 to people with cryptocurrencies. There are basically 3 different types of letters. The next slide is an example of the letter 6173. As you see the language we highlighted here, if you get this letter, the IRS is basically telling you you're in serious trouble. They know you have cryptocurrency. They know you have unreported income from cryptocurrency. I would highly suggest you to work with an attorney if you get a 6173 letter, because there may be some criminal issue there. The other 2 letters are 6174 and 6174A. They're less harsh. A lot of these cases have yet to be resolved. Probably due to pandemic, a lot of these things are slowed down. But with the increased budget and the aggressive hiring going on in the IRS, I personally expect to see more and more of these cases get settled really soon. Yeah, the IRS likes to issue summons to gather taxpayers' information. We've seen this before with foreign financial assets. This is the original John Doe Summons on Coinbase. And more recently, we've seen summons on more crypto platforms like Circle, Kraken. The IRS is basically saying, hey, we see a lot of people participate in these exchanges, but we don't see a lot of reporting on their tax returns. We don't see enough disclosure that we're expecting. The IRS want more records. They may very well send out more summons. Finance, which is, I know a lot of people with accounts with Binance. The company are suspected for money laundering, and they closed all their American customers' accounts. It's impossible to get data if you have a Binance account. So if you or your client have Binance account, you want to be aware that there's an ongoing investigation since May 2021 on this company. It will be interesting to see what is the outcome. This is a new big initiative by the IRS, the Operation Hidden Treasure. Not to be confused with the new Hulu show. The IRS comes out to say, hey, taxpayer, if you have unreported crypto, get legal advice. They have a team of agents who are well-trained, specially trained in cryptocurrency in the Operation Hidden Treasure. They're going after people who are not disclosing their cryptocurrency, have unreported income from crypto on their tax returns, who may be hiding cryptocurrency transactions from a civil and criminal standpoint. Again, it's very, very similar to what the IRS has done to foreign financial asset disclosure. They're putting in a lot more resource and effort into enforcing the cryptocurrency reporting. Like I said, there's no real amnesty program for cryptocurrency. You may argue that your cryptocurrency is a specified foreign financial assets that needs to be reported on Form 8930A, but it's a very gray area. If you have some delinquent reporting issue, work with attorney by all means. Work with CPAs and tax preparers who are very familiar with cryptocurrency reporting, because you want to do it right with the IRS. This whole area is changing very rapidly, as you can see. We'll do more crypto webinars as things evolve. Stay tuned.
Thanks, Van. Okay, we got a couple minutes left. Surprisingly, I didn't think we would, but we have a couple minutes left to go over some questions. So the first question basically says, I own shares in an offshore company. I'm a foreign national. I'm going to become a US tax resident in about a year. What should I do? And I've kind of, shortened that a little bit to not give out certain facts, but that's basically a prime case for what we call pre-immigration tax planning. Basically, I think it's important for people to know, like, once you enter the US tax net, it's like gravity, right? It's going to suck everything in, and you're going to have to do reporting and tax on worldwide income and worldwide assets. So what will it look like if you did nothing? And then what steps can you take while you're still in your non-resident period to perhaps clean that up before you become a US taxpayer or US tax resident? I wish I could get to everybody before they became a US tax resident, given that advice, but it doesn't always happen that way. And a lot of times you kind of have to clean it up after the fact, hence the offshore voluntary disclosure. But for this person, I would say that you probably want to look at some kind of pre-immigration tax planning. Question was asked, what is the difference in terms of foreign asset reporting for the World Bank, old pension and new pension? Basically, there's not much difference on that. I think they both get reported on the Form 8938. But if that's an area where clarity is lacking, I think that's definitely something that we can do in upcoming presentations for World Bank folks. Happy to do that. What is a life insurance wrapper? It's a great term, isn't it? I don't think we know. That's not something that occurs here in the US. Basically, in Europe, this is primarily where I've seen it. If you take an investment account, right, and then you wrap it in a life insurance policy. And so on the outside, it looks like there's some kind of term policy that is based off of your life expectancy or something like that. But in the interior, the underlying investments that are generating the income for the policy, those are all based off of mutual funds or some kind of basket of investments, which is a super interesting product. But the problem is that you hide everything below the top layer. And so if it looks like just a general life insurance policy, maybe you report the cash value, maybe you report the earnings and accretions if you ever catch it out. But really, what should be happening is you should be looking at the underlying assets, what's come into the account, what's going out of the account, and those typically get taxed as PFIX. So it's a very interesting area. Okay, so there's some good examples of cases with people with millions of dollars, but there's not any with smaller amounts less than $100,000. Is there a minimum threshold to declare? I'm not sure I understand that particularly, but the DOJ has a very limited amount of people they prosecute every year. It's about 4,000 to 5,000 people. So they're only going to make examples of big names or big cases. That's not to say that, people that have, $40,000, $50,000 offshore don't get penalties or don't have issues. Those happen all the time. So there's no real de minimis. If you have to file the FBAR, if you have to file any of those international forms, you need to do so properly and correctly, because IRS gets a ton of money from people that don't do it correctly. Big fish, small fish. You only hear about the big fish because those are the cases that they want to publicize. I used to hold a G4 visa and I became a green card holder. So again, primary example of pre-immigration tax planning, right? You want to get to that person before they switch over to the green card. What declarations and forms will I need to complete as a green card holder who is not a US citizen? Well, whether you're a green card holder or a citizen or someone with a substantial presence test as a tax resident, It's the same filing. You're a tax resident, it's gravity, it's worldwide taxation, it's worldwide asset reporting. So that I think is a good example of someone that probably needs to do some, I won't call it pre-immigration planning, but pre-filing planning, just to see what they've gotten themselves into, and hopefully there's no real big issues there. Okay, does Form 3520 apply to the World Bank pension? The answer is no. You do not file a form. And I've had that question a lot. I don't know why people believe that to be the case, but it is not the case. The World Bank pension is under Internal Revenue Code 401A. It's a qualified pension. It's a foreign pension, so you still have to report it on Form 8938, but it does not go on the 3520. What is FinCEN? Great question. So FinCEN is the Financial Crimes Enforcement Network. It comes from the Bank Secrecy Act, which is Title 32. And if you want to see what it looks like on TV, there's a really cool movie called The Accountant with Christian, it's Ben Affleck. That was Christian Bale, but no, it's Ben Affleck. It's a really good movie, but FinCEN is basically the organization that's trying to come after him in that movie, and I think they do a good job at highlighting kind of who they are there. Okay. I own a second home overseas. I rented last year, and the income was about $12,000. I now want to sell it. Must I pay 30% from the total sale in my country? So this is a very specific fact pattern going on here. But the general rule of thumb is that if you have foreign rental income, you do have to report it on Schedule E, Part 1. There is a different depreciation method that you will use for foreign rental property than U.S. rental property. And if you do sell that property, there will be a U.S. capital gains tax applied to that. If you pay capital gains tax in your foreign country, there's obviously a credit that goes with that. But that's something that you should walk through with people. What is the statute of limitations? You went through it very quickly. Oh, I love that question. There are 3 different statute of limitations, and when I was just starting out as a practitioner, this is the thing that I honed in on all the time. So give me the account transcripts, give me the wage and income. And I didn't really care whether or not they had, if they have a balance due, I want to know what's the ASED, that's the the assessment statute expiration date. What's the RSED, that's the refund statute expiration date. So for example, if someone comes to me and says, I want to do an amended return and it has a refund and maybe it's from 17, 18, or 19, I'm gambling because maybe I'm doing a return that the refund statute has already passed. So it's important to ask the IRS in your system, what is the date that I have to file this amended return to get a refund? I need to know that so that I can get the return done before that date. That's the refund statute expiration date. And then for those of us that have the luxury, or I should say not luxury, of doing tax controversy work, if someone has a debt with the IRS, that debt will expire in 10 years. Believe it or not, it'll just drop off. That's called the collection statute expiration date, or CSED. And so I'd like to get that too, so that I can talk to people about payment collection options. Okay, are taxpayers required to file interest dividends from inheritance from abroad? If yes, what's the rationale, since the wealth has nothing to do with US obligations? Well, again, you're a US taxpayer, you're subject to worldwide taxation and worldwide international reporting. So like I said, it's gravity, it pulls everything in. If you don't like that answer, then you should probably have called your congressman and asked them to change the US taxation system to residency-based taxation instead of citizen-based taxation. That's unfortunately just how we do it here in the US, and I wish it was different. Okay. Is there an FBAR penalty for non-reporting of cryptos? No, crypto does not go on the FBAR. The FinCEN made that abundantly clear. It may go on the FBAR in the future, as Fan indicated, if that provision of the Treasury, the last little one that they want to see evoked, then crypto would go on the 8938, and then likely FinCEN would say it also needs to go on to the FBAR. So that's an interesting issue that we are looking closely at. For the 5% penalties, only related to the personal account balance, or the entity account value is also considered. I would have to understand that a little bit better, but there's different ways that you calculate the 5% penalty when you have a trust or a foreign corporation or a foreign partnership. That's a very specialized calculation. I inherited $200,000. Do I need to pay penalties? I've not reported it. It appears the inheritance was in 2021, so you just need to make sure to file a 2021 3520 Part 4 by April 15th, 2022, and then you won't get a penalty. But be real careful, because the IRS doesn't really honor the mailbox rule. So you want to make sure you mail that 3520 well before April 15th, 2022. Okay, so this person says they have a child living in Australia. He files his income tax return. I'm assuming he's a US citizen or US taxpayer. He has crypto in Australia. Does he need to report the crypto to the IRS? The answer is yes. If there are crypto income, if there's some kind of crypto transaction, he definitely needs to figure out his situation. And if he has reporting, the reporting should be done. What is the Irs Amnesty? So Irs Amnesty is basically just a term that we use as practitioners for any voluntary disclosure program that we use to help people get back into compliance for non-compliance issues. So if you have certain forms you haven't filed with your tax returns, certain income that's not been reported, or FBARs that haven't been filed, then the general term is you should use an Irs Amnesty program. Then the question is, which one do I need to use? And hopefully today we gave you the various options, which are typically OBDP, some sort of streamline filing, DIRSP, or DFBAR. Do I need to pay tax on foreign inheritance? So the answer is no. You have to report it for information, but in the United States, we don't have a federal inheritance tax. Now, just to caveat that, there are some states that have an inheritance tax. I believe there's 10 of them. So you also need to check the state that you live in. But at a federal level, there is no federal inheritance tax. It's just an informational reporting. Okay, we're going to do one more here. Let's see. If a mistake is made on Form 8938 and keeps the return open indefinitely for review, does that mean FATCA penalties can be assessed for an infinite amount of time? The answer is theoretically yes. And I told the IRS this many times. I thought, that's ridiculous. You're telling me to really be truly compliant, someone in 2025 would have to go back and file 2011 through 2024 tax returns. It makes no sense. And I think at some point in time, they have to realize there's a boundary of what can realistically, legitimately be done or should be done. But technically speaking, that's the way that the rules are written for FATCA in the Form 8938, which again, I think there's the way that the IRS or the Congress and the IRS have come up with, and then there's the reality of the situation. Is this really what we're trying to accomplish by using these rules? Is the carrot and the stick really the method that is correct still? I mean, this stuff has been around for over a decade. Is the result what they thought it would be? If not, is there a better way to do this? I would opine to you that there is a better way to do this, and that the GAO, TIGTA, some of those folks, some of those organizations should really take a closer look at, is this achieving what it's supposed to achieve? I think, I'm not going to speak on behalf of the National Taxpayer Advocate, but I would say that she probably would agree with my comments here that it's really overburdensome and it's something that should be updated or changed to make it easier. And that's it for now. If there are any unanswered questions, we'll try our best to get back to folks and help out as much. I hope you guys enjoyed the presentation, and we will have more, like Fan said, more to come. Thank you.